The Momo strategy is a trading strategy that utilizes momentum indicators to identify and capitalize on short-term market trends. Momentum indicators are tools used in technical analysis to gauge the strength and speed of a price movement. They help traders and investors understand the momentum of a stock or asset, which can be helpful in making trading decisions. The Relative Strength Index, RSI, is a popular momentum oscillator that measures the speed and change of price movements. It can be used to identify overbought and oversold conditions in the market, as well as potential trend reversals. The stochastic oscillator is a popular technical analysis tool used by traders to identify overbought and oversold conditions in the market. It measures the relationship between a security's closing price and its price range over a specified period of time, typically 14 periods. Traders look for bullish or bearish signals when the stochastic oscillator crosses certain threshold levels, indicating potential buying or selling opportunities. Analyzing price action and volume in trading involves studying the movement of prices and the corresponding trading volume to gain insights into market dynamics and potential future price movements. Identifying breakouts and trend reversals involves looking for significant price movements in the market that indicate a shift in the prevailing trend. This can be done through technical analysis using indicators such as moving averages, Bollinger Bands, and support/resistance levels. Traders also use chart patterns such as head and shoulders, double tops/bottoms, and triangles to identify potential breakouts and reversals. A practical example of using data analytics to improve customer retention rates in a retail business.